Cool. Let's kick off. Good afternoon, everybody, and welcome to our webinar following today's autumn budget. I'm Dan, and I'm pleased to be joined today by my business partner, Mark.
Hello there.
We'll be running through the key points that were raised today and what that may mean for you and your business. After months of speculation and political spin, we actually managed to get an early glance at the Chancellor's speech before she even had a chance to deliver it, thanks to the OBR
Yeah.
leaking their report about 2 hours early. So it was good for us because we had an extra couple of hours to prep for what was coming up, ready to go through as much detail as possible with you today. So before we get started, just to run through a bit of housekeeping stuff, the chat box, which somebody's already found, along with the Q&A tab, are open. So if you've got questions, things that come up as we're running through stuff, then please feel free to drop them in there. I'll be keeping a bit of an eye on that. And where possible, I will try and include that within the topic if it's relevant to what we're sort of going through, just because it always helps to add to that sort of conversation piece and expand out on bits that we know. Likewise, at the end of once we've run through the sort of main topics that we're going to be covering off, we'll have opportunity for a bit of a Q&A at the end. So again, please do feel free to ask. So I'm going to hand over to Mark, who's going to cover off the first pieces.
Okay. Well, wasn't that fun over the last too many months? And what a fiasco. We've had it for months now where there's been so much, if you know the expression, kite flying, briefings, leaks, and then it's been a disaster. I think it was the deputy or the chief economist or the ex-chief economist of the Bank of England referred to it as a fiscal fandango. Um, um, and I don't know who Simon is, but you'll deal with that, Daniel. Doesn't say which Simon. Um, the and then to get the OBR releasing its documents, which obviously they shouldn't have only been released after the Chancellor sits down 2 hours early, helped us, but what a shit show. Anyway, right. Um, General observations. I usually do this part because I'm the miserable one out of the two of us, as everyone who knows us knows. Yes, it's a Labour government. It was a tax and spend budget. Um, I think it's actually been quite accurately described as a spend and tax again budget. But anyway, um, we know that the Chancellor's breached her promises. She promised that was the last budget was a once and for all. She's going to raise 40 billion off us last time. She did raise 40 billion off us. And I'll promise not to come back anymore. So she's back again now. She's asked for another 26 billion from us. Um, the net result of that is that by 2030, the UK will be paying the highest rate of taxation it's ever paid, ever, which is 38% of the country's GDP will be suffered in taxation. That's a huge amount. You know, to be the Chancellor and to be proud of the fact that you're going to the highest tax rate you've ever had from the country, 38%. Massive. And how well are we doing with it? Well, OBR, no, I'm not actually a big fan of OBR. Chancellor's not a big fan of them either at the moment. There's lots of talk about the fact the OBR's got more authority and responsibility than they should have. And that's probably going to change as a result of their cock up today. But the OBR has downgraded all of our growth forecasts right through to 2029. Everything's fallen by 0.5% in 26, all the way down to it's only going to fall by 0.3% in 29. Terrible. So we're paying huge amounts of tax, most tax you've ever paid, ever in this country. And our growth is collapsing. So really good news. Great budget. We're happy, aren't we? Come on, smile. We like it. So there's my pessimistic overview. I don't think it was good at all. If there's anything you could say about that budget, it was that it wasn't as bad as it could have been. But that's the whole point of kite flying, I think, is to make us all frightened stiff, ruin the economy. And then when she sits down, you go, phew, could have been worse. So
There's a classic thing that we were chatting about, Mark, wasn't it, on the lead up over the last sort of few weeks
yeah,
of sort of drop some pebbles in the pond and see which one
Well,
causes the biggest ripple, don't you? And
yeah.
again, we see a lot of it. And it's again, certainly conversations that we have with clients and contacts and so on about the activity that actually triggers pre-budget. So you get a real contrast, I think, with people where they sit on their hands awaiting something that they can't control. Or they do lots of actions because of they think something might change. And again, I think it's still just classic that it feels like that procedure before a budget just gets worse and worse.
Yeah, well, yeah, absolutely. So, you people that are attending here today, you're here because we've been telling you that we've been doing it. So, of course, we market it on social media. One of the things that we talked about was that, should we actually explain the difference between what's known as the dead cat strategy of saying something to deflect opinion or the kite flying? And actually, they were just so absurd with the amount of destruction they were doing in the market. There was just no point in us even explaining it because no one could explain what they've been doing. So we didn't even try to explain any of that to you. Dan and I have been biting on our knuckles saying, no, we better not say too much. I know
Yeah.
I've been saying a few things and I've been a little bit provocative, but
Well, it's not like you, Mark.
no, I know. So there's my overview. Um, could have been worse. We were primed to expect it to be worse, but it wasn't quite perhaps as bad as it might have been. But yes, Darren, I agree with your emojis.
Yeah. So
Okay, Daniel, over to you, my
yeah,
friend.
yeah. So sort of leading into like I'd say one of the sort of first thing around some of the changes that came in. Again, as much as we said about having a bit of a pre-side, so actually we saw this last night that there were the announcements in terms of increases to the national living wage, national minimum wage, and pay for 16, 17 and apprentices that will come in with effect from April next year. As many of you know, especially obviously if you employ people or if you're working with colleagues, etc., this is the third quite significant increase to these rates in quite quick succession. So we're seeing a 6.7% increase on the national living wage, 8.5% on the 18 to 20s, and another 6% on the 16, 17 and apprentices. So again, we're relatively, I'm not going to say, yeah, I am cynical. Mark might be grumpy one. I'm probably the cynical one. With it is again great sort of opportunity for the government to say how well they're doing with increasing people's pay, but who pays it? And that comes down to business owners, of which most of the guys, people that are registered on here, small business owners with teams that are trying to grow something, and effectively this has now increased your cost base further. Obviously, match that with the fact that you already faced this year the increase to the employer national insurance rate, and also obviously the drop in threshold, which sort of leads on nicely to probably the biggest tax grab that we've been talking about for, I can't remember how many of these, Mark, around sort of fiscal drag. And by doing nothing, you actually generate quite a lot of tax revenue.
Yeah,
So it was announced as part of this that the thresholds of which people pay tax at will be continued to be frozen for an extra 3 years, um, which on the last year of the forecast, I think was estimated that that will raise about 12 billion pounds worth of additional tax revenue.
yeah,
So I said it is a great one. Do nothing, get lots of tax basically in terms of the way that that looks. And again, with the increase to that base level, that's only going to have a cascade and a knock-on effect in terms of what that total sort of staffing cost looks like for businesses.
yeah,
Um, we need our clients and again, people that work with us to be aware of that because of obviously with those things coming in from April, now's the time to put those plans in place so that you're not sat on the 31st of March worrying like hell that you haven't done any of this and effectively you're going to foot the costs as the business owner. So say get ahead of those plans because of you've also got the sort of second part on that, which again sort of ties into rates, is around the dividend tax rate. So again, lots of people that run small, medium-sized businesses, the typical way that they may look to pay themselves maybe a combination of salary for effort and dividend as a reward in terms of the risk that they've taken. The rate on the dividends will be going up from April 2026 by an extra 2%. So that takes the basic rate up from 8.75 to 10.75, and the higher rate from 33.75 up to 35.75. Again, we've seen this quite a lot with changes obviously to the national insurance levels and so on. This is another sort of closing of the gap between the tax rates that an employed person pays and that a self-employed or business director might pay as well. I did mention to Mark beforehand, the dividend taxation one for me is always a big gripe in the fact of, can anybody remember the health and social care levy that was around the sort of COVID time that they said that that was going to come in? It got scrapped very, very quickly as an additional tax, but the only tax it didn't get taken back off of was the dividend tax. So again, that stayed at 8.75 rather than going back to the 7.5 at the time if you look at basic rate. So that's still there. Plus now you've got an extra 2% coming. Again, like I said, if that's then part of how you get paid, planning around that is going to be really, really important. Um, One of the bits that's sort of come up, and again, it's a topic that's sort of been, I think, a lot on people's minds, is around what that does mean around employing people. We've certainly had a lot of conversations with clients around what they're doing around sort of their workforce, how that might work from a process point of view. Do they increase headcounts, etc.? To be honest, a lot of people aren't going to be looking to do that with these increases that are coming in. I think it's going to be quite the opposite in terms of what people might be looking towards. Also, with regards to, unfortunately, I do think, and again, anybody that knows me knows I'm very much an advocate for people coming through and developing and building a career and so on. It really worries me that some of this prices out that younger market in terms of employers looking to employ at the sort of younger age, which I think is a real shame that direction of policy seems to be determining that rather than, I say, business decision in terms of where we might look to focus on. There is a slight, I don't know, incentive, I guess, really, in terms of what's been mentioned around apprenticeships and support for people between 18 and 24 in terms of getting into work. But having had a look at the initial detail that's sort of come out outside of what was announced, there does seem to be some odd caveats around that, around how that would be supported, around people on universal credit and quite a significant amount of time on universal credit before they would even qualify. That's definitely one that I said we'll probably be looking at a little bit more detail as more information comes out as to what that actually means to try and support those young workers into work and what that opportunity actually looks like from an employer perspective as well.
I think, sorry, I'm going to interrupt you. She was speaking with forked tongue. She said we've got all these schemes, but from the initial review that you and I have done in the hour and a half, 2 hours since she sat down, eh, it's not it's not going to be what she said. But anyway,
Yeah, it doesn't feel that way.
no.
No. Um, so yeah, so as I said, there's a couple of things there. So around employment, around your dividends, I say some sort of planning pieces to really sort of come in terms of then what you're looking at from that perspective. Um, in addition to that, again, classic in terms of government revenue generation will generate money from you doing things wrong, effectively, is the way that they will look. So there are some new penalties coming into effect for limited companies with regards to late filing around corporation tax. Uh, Currently £100 if you miss it, but they're actually doubling that penalty that's coming through. So again, just something just to be aware of. I know everybody obviously behaves and files on time, I'm sure,
Yeah.
but so it's something just to be aware of in terms of what's coming through. Again, from a corporation tax perspective, capital allowances was something that was mentioned in terms of some changes that are coming through with the introduction of a new first year allowance at 40% and a reduction to the main rate allowances from 18 to 14. Um, Again, like obviously that was sort of mentioned within there, but they did say that obviously the full expensing piece still will apply. So for lots of small businesses, actually, from a capital allowances point of view, you're going to probably be largely unaffected by those changes because of the way that full expensing piece works and the limits of which that works up to. So again, it's something that was mentioned, but I don't think that was something overly to concern that sort of small, medium-sized business size.
Great.
I think that might be main
Okay.
rules for that bit.
Well, there's a couple of other bits. Obviously, what we're doing at the moment, we're going to do into specifics for the different client base. So we've got the non-residents and the property people. We're going to do all that in a moment. Don't worry, that's all coming. Still trying to do with a few smaller bits. Um, um, One of the things that has happened was the change in the de minimis rules. So anyone that's involved in retail knows that if you import product, let's say from whichever country in the world it is, let's say it's China, as a retailer you pay import duties with, but if they Chinese company who have potentially dumping into the UK right now, they've got £135 minimum, a de minimis limit it's called. So anything's below £135 that you purchase from China, there's no import duty. So the government's scrapping that one. So that's a slight, that's something that the retailers have asked for, and I think it's a good thing. So am I happy with the budget? No, but there's some little nuggets of good stuff in there, but not many nuggets. Um,
I think the only one to watch for that, Mark, wasn't it, is that the time scale that they've
yeah,
put
it's
onto
28 or something. Yeah,
20, yeah, by the latest March 29, I think it was
yeah.
that they would be dealt with for, yeah.
Well, and how much is it going to cost to deal with the import duty paperwork on every parcel that comes into the country? And there's something like 40 billion parcels come in. I was reading this in my prep ready for this. I've forgotten the number now, but it's a huge number. So
Mhm.
now we've got to employ all those people in the customs office to deal with the paperwork of 40 billion parcels to kind of collect the three and sixpence of tax. But yeah. But anyway, um, Dan, do you want to deal with this reporting company payments to
Yeah, of
participants?
course. Yeah, yeah. So again, if you run a limited company, you may have come across a term referred to as overdrawn directors' loan accounts or loans to participators. And often this is around, like, again, if we go back to how somebody would typically be paid from their business, they may get a salary, which they get a pay slip, and they pay themselves a net pay. They may look to take a dividend, and they may draw that money away from the business in that way. One of the things that we do often see is that people don't really understand how dividends should work and how that operates and how they should interact with their business as a shareholder and a director, which can sometimes lead to people not having the right paperwork in place in terms of with regards to recording dividends. And just a reminder to everybody about getting too technical on it. A dividend, you make a profit, you make your provision for tax, what's left might be yours.
Yeah,
Okay. Effectively, you should do that review every time that you want to pay a dividend. So whether
yes,
that be
yeah,
weekly, monthly, quarterly, we don't really care about the frequency, but those are the steps that you should go through in terms of establishing that money that I'm looking to take from my business. Is it actually a dividend, or am I borrowing money from my business? I
yeah,
haven't got the profits to declare the dividend, but I still want to take the money. The trouble that people sometimes get themselves into is that, and again, this is the balance, is that people need money, don't they? Like in terms of, we all know, like our personal costs and so on would go up. Um, so they're not going to wait to take it. They take that money anyway, and it can sometimes give that position where they've got an overdrawn director's loan account. So that's money that now they owe back to their business because there isn't sufficient profit to call it a dividend. They maybe haven't run it through payroll in terms of it being salary. So what is it? Um, it's always been quite a hot topic in the fact of it comes with quite a hefty tax charge anyway, in terms of what the company would pay on it,
yeah,
which is in line with, and again, that's a good point. I don't know whether the rate will change because of it's previously been in line with the higher rate of dividend tax,
yeah.
so 33.75. So now that we know that that rate's going up, I do wonder whether the tax on the overdrawn direct loan account will change. But
8601 tax, yeah,
that might be something to check and to look at and which will come out. So, it's got a big tax chunk, so that's cash that's otherwise tied up with HMRC. It does come back if you can repay it, or it's cash going back into the business, which again, people don't often like that move back in. They like the money coming out of the business. They don't like putting it back in. Um, Having a really good handle around that is really, really important. As I say, from a tax management point of view, but actually just managing your business perspective, like, because if I always find it's a big indicator for like actually other things that are going wrong. So if people have overdrawn, the argument is well, you're probably not making the money that you want your business to be able to make, because otherwise it would be able to support it with a dividend. So if it's not doing that, I'd always say it points to another problem somewhere else that actually you might want to give attention to and make those changes to be able to support it. One of the changes that's coming in is that HMRC have going to be doing a consultation through 2026 with regards to how that's reported and what HMRC's powers are around it. So they've already announced that they will be sending what they refer to, and again, you probably have heard us use the term before, like nudge letters. So HMRC will send a letter saying, we're aware that you've got, and this in this case, a loan to a participator that you've told us is repaid. So you might have repaid it after the year end. Show us that you've repaid it. So they've got a greater level of interest in this because again, they know that there's potential tax if people aren't addressing these problems that sat there that's not with HMRC at the time. I say it's going to be huge for small. It's something that, again, over the years we've been doing this, like it's a very, very common theme that we see come up within, I say, typically, I say, small, medium-sized business type accounts. Um, so it's really important. A, you're on top of it. B, you know around what profits and what income that you want to be generating from your business, and C, that you've got the right paperwork in place to show that you've done all of those bits. That's board minutes, that's dividend certificates, that's a plan around how that works. So yeah, I think that one will be a really, really I say interesting. I think that'll be one that's heavily looked at within that sort of small business space.
I think it's going to bite a lot of people on the bum. I'm going to come up behind Dan. I know we're talking about a techie topic, so please stay with it. And those of you that ever work with me, you know that I'm very graphic and I wave my hands around and stuff like that. Normally, what a person does is they taking money out of the company, so they've borrowed money and they've got all this debt coming down. So they're in debt. They owe the company money. And then once a year, you declare a dividend. No, you can't do that because if you've ended up borrowing money, you've got to pay interest on that money to the company. You might have to pay CT 601. Is it CT 601 or S455?
Section 455, yeah.
455. Got the piece of paper wrong. Um, you're going to have to pay all these taxes. Those of you that follow us on social media, particularly on LinkedIn, I've been sharing it. Just so you got a heads up, we can see that this is going to become massive. It's been planned for being massive. We know it's going to become massive. We've actually just employed our own lawyer in-house to lead on some of this company secretarial stuff. Please engage. If you're one of our clients, please engage with us and just get your damn paperwork straight with you. Because it's going to come and bite you on the bum otherwise. So, yeah, that was my last rejoinder addition to that.
Yeah.
We've got the situation of the salary sacrifice. We saw that in the budget. We want you to save money. We're going to let you put money into a pension. You can do a salary sacrifice and you can put money into your pension because you need to make savings. Oh, what? You're not going to pay tax on all this money? Oh my goodness. We're going to stop you putting money into your savings. You're not allowed to. No. Okay. So we've now got all this massive restriction. You're going to put £2,000 into your pension on a salary sacrifice scheme, unless you're paying tax on it. That's fine. Do you want to guess who's going to be looking after that? It's the employer. So it might be your company. So you as a worker in the company doing a salary sacrifice, and that's good. And you've got people doing a salary sacrifice in that you employ. Excellent. Guess who's going to be responsible for administering it? You. So that's a big change coming on. It did primarily affect people who are on humongous size salaries and bonuses. I think the Chancellor actually said that the people who work in the banks who get £100,000 bonus, they just stick it into salary sacrifice. Yeah, that's who she's attacking, but she's using a sledgehammer to crack a nut. So she's hit everybody, including all your staff and you, by attacking some people who are getting humongous amounts of money. Okay, but it's going to have an impact on you. I think the last thing you wanted to talk about, Dan, was electric vehicles and the
Yeah.
CGT,
So
etc.
yeah, so that, yeah, obviously electric vehicles for a lot of people has been a topic that they look at with regards to obviously the tax reliefs and so on that have been attached to them. If you're going to be buying them for a business, for example, they've been super efficient because of the capital allowances that are attached to them, which I know that they've extended.
Yep.
Also, obviously, the low rates of benefit in kind, but again, those benefit in kind rates have, planned to go up. I know that they're nowhere near still, let's say, fuel and diesel vehicles and so on. But as obviously mentioned about this mileage charge that's going to come in terms of this additional tax. And Charlotte, just seeing your question pop up in the questions, it was actually, that was the point that we asked, that we spoke
Yep.
about before
Yep.
coming on here in terms of actually the administration around doing this. It just feels like it's going to be one of those that's probably going to cost more than what they generate in tax revenue that they get. My only suggestion, and it was just that I wonder if they'll do it this way, is through like I don't know, people have MOTs and stuff, they've got to track on that. But again, new cars, you don't have those
Don't have an
typically in a
MOT.
3 year period anyway. So yeah, I don't know, Charlotte. We'll have to see what sort of happens with that one in terms of how that is. But I think personally, and again come back to my cynicism, it's been one of those that we can see that was obviously going to come. So if you look at where tax is generated from, fuel duty is a huge proportion of that we pay filling up our cars. So if they're now going to direct everybody, and obviously it's been the agenda for quite a while, towards electric, okay, well if people are doing that, that's going to see a drop in the duty that they collect elsewhere. So they're gonna have to replace that. So to me, it felt inevitable that effectively, if we saw a big swing in people moving towards electric, that the tax would go up to compensate for the fact that people had moved to electric.
Yep.
So I'm really, really not surprised by the fact that it's coming. And I would, over the next few years, I wouldn't be surprised if there's more that sort of gets attached to that because it feels like it's, I say, probably the third bite on it in terms of changes since they first sort of, I say, launched electric cars with lots of incentives attached to them.
Yeah, and
Yeah.
obviously what we have seen today is she's put in there was a 5p reduction in the fuel duty levy, which has been in existence for quite a while now.
Yes.
And that's going to
Until September 26th, isn't it?
ends in September 26. So if you're in petrol and diesel, you're going to have to pay more for your fuel anyway. And now the electric are going to have to pay a little bit. And how the hell they administer it, who knows? Impossible. Okay, shall we get onto some property stuff now?
Yeah.
Okay. Um, so this one, I was starting with this one because it will affect the property people, but it also affects everyone else who is doing it. Wonderful phrase. And I did not record the Chancellor's speech. I just didn't record it, so I haven't been able to play it back. But I'm convinced I heard, although wasn't so convinced, that we are talking about capital gains anti-avoidance sharing, right? This is where you share um, assets, right? And if you share an asset, does somebody pay less tax and therefore the whole point of making the asset share is to reduce the tax bill, right? Now, we used to, those of you that have been talking to me and Daniel will always know, historically, evasion was bad and avoidance is okay. Now, evasion's sent you to prison, avoidance is bad. So when we read, and read the red book, we've gone through the 76 pages of the red book between Daniel and I, read it. We haven't done the 206 pages of the OBR yet. I haven't. I know Daniel wouldn't have had a chance to do it either. What it actually says, it's relating to shares. So share exchanges. Now, do they mean shares as in companies, or do they mean share as in sharing an asset? So for my property people, I've got clients who I've said to them, well, can we do a deed of trust, etc. If you're joint owners, can we move a share away? Or if you're tenants in common, can we change the proportion of your share of the property? I don't know how they mean the word share. I just don't know. It could be that they are talking about shares in a company. Oh, in which case, are we talking about company amalgamations? Which again, a lot of my property clients do. You might end up with an active company at the bottom, let's say an investment company. You then bring in a trading company next to it. You then create a group company. Can you do an amalgamation of those entities? Well, that's a share organization, as in company shares. Now, the interesting thing is, it's all been brought into effect immediately. Now, it's happening now. Well, I don't know what they're doing. They haven't told us. We're the accountants who are organising all this stuff. So that one's, as far as I'm aware, is one I've got to do as much research on as I can, going through the OBR, but it's going to be a change to the Finance Bill 25/26, but it's backdated to today. So the rules are today, but we don't know what the rules are yet because they haven't written the 25/26 Finance Act. Okay, so there's a nice, interesting one. We flagged it up to our tax managers here to watch for them doing the amalgamations in case there's any blowback on amalgamations we're already handling. So that's the first one on the for the property guys. Can I do another one? I've only got 5, so that's all right. Construction industry scheme. Again, you'll have heard me banging on about this. The construction industry scheme is there. It's meant to work. So many people just ignore the fact they should be doing it. I've got clients who I tell them they should be doing it, and then they choose to say, well, I'm not really sure it really relates to me. Yeah, and I have to argue with them, etc. Good. The announcement was in the Red Book, and it's one sentence. The government will strengthen HMRC's powers to tackle fraud within the CIS scheme. I don't think it's the big guys. I think it's us. So please, if you're involved in any trading activity where you are refurbing a property with an intent to dispose of that property, please, for goodness sake, just reach out to us. We're going to be putting our contact details up at the end of this video, this presentation. So that one, I think you've got to keep your eyes open for that one. If you want a growth industry, let me give you about a growth industry. The growth industry is tipping off HMRC for people you know who are doing things wrong, because you can get 30% of all the tax that the government extract from that person. You could get up to 30%. It's not 30%, up to 30%. That was a huge increase in the tipping off amount. I think it's one of the most profitable industries right now. If you could tip off people, tip off the taxman. How nasty is that? Be aware of people who are doing that for malevolent reasons, please. There can be people who are saying bad things about you too, just to create you some pain in the arse. But if they happen to get any tax, they get paid for it as well. So it's really good news. This one is property, but also for my non-resident tax clients. Cross-border sharing of information. With effect of April 26, there's a lot of information going to be shared across borders now between countries within, I think it's the FADR, but the Financial Action Task Force, FATR, yeah, Task Force. About, I've got a client who's got a property in England. He's on the stamp duty register. He's on land registry. He's on the. Do you know about it? I've got this chap who's got this income from information is going to be flowing back and forth. So again, even last week, I was talking to a letting agent who does look after non-resident clients who have not registered for the landlord scheme, registered for the international landlord scheme. Get it sorted out. There's a lot of information flowing back and forth. So if you know anybody involved with cross-border transactions, you own property abroad and you're in the UK, or vice versa, owners abroad, property in the UK, make sure they got their act together, please.
I think it's worth adding there, Mark, as a general point. There was something else mentioned about the more routine sharing of information with HMRC around like savings interest and
Yeah.
stuff like banks and institutions and things. So, they are
It's the
watching
land of
things.
big society, Big Brother now.
Yeah.
You're just being watched and they're just sharing data. And I've always described that the channel we're swimming down now is just getting a little bit narrower and narrower. So just watch, will you please, that there's information that flows and you've got to be careful of it. An interesting one, and this is just an observation, particularly for the property clients. we've all seen this whole thing of I don't want properties in my own name, I want to go into a limited company. And yes, we know that there are companies that are offering the world on this. You never pay CGT, never pay stamp duty, and that's been closed off. We know about the spotlights. One of the areas that we have got is that if you've got six or more properties, you might get commercial rates of stamp duty. That's fine, that's legislated. Um, but if you want to claim Section 162 relief, which is where, yes, I'm not an investor in property, I am a business that has property in my own name. I want to incorporate it into a limited company and I'll roll my CGT forward into my limited company. That's called Section 162 relief. Okay. Lots of people are going down that path right now. Lots of people are going down that path. If that relates to anyone here, fantastic. Make sure you're talking to us, please. Because one of the changes just happened is claiming 162 relief was automatic. So if you just moved it, because you've ticked all the boxes that you can get Section 162, it's automatically given to you. And if you didn't want it, if, for example, you chose that you want to pay CGT, I can't imagine the scenario, but let's imagine, you had to tell the government, okay, they've reversed the process. Now it is automatically not given. Now you have to go to the government and say, I wish to claim Section 162 relief. Do you want to guess why that is? My assumption is because it gives HMRC the chance to come back and say, well, are you really a business with property or are you just an investor? Demonstrate to me you're working 20 hours a week, demonstrate this, demonstrate that, demonstrate it is a primary source of income, demonstrate all the criteria that was being given by a judge, which we all rely upon. Demonstrate it, prove it. So again, there's a message coming through. It always comes through loud and clear on these things. Get your paperwork straight. I know that one of my colleagues is now dealing with a client. I don't think he's registered for this. If you have, Steve, great. Give us your evidence of your hours and exactly what you're doing in those hours that you're spending on your property business to claim the Section 162 relief. That's my assumption as to why they changed it around that way. I can't think of any reason to change it otherwise, unless they just want you to put your hands up, go to them and have to get their permission to claim the 162 relief. Okay? Be aware of that one for anyone looking down the incorporation route of your properties, please.
With the incorporation stuff in my market, obviously it's always something that we are talking to clients about or
Yep,
people that contact us. It's multiple times a week that we probably have those sorts of conversations with people.
yep, yep,
Um, there's obviously probably two additional factors that have sort of are more prevalent on the table now, I guess, for people wanting to have that conversation with us as well. Obviously,
yep,
one that was announced today with regards to the increase of the income tax rate for property income from
yep,
April 27.
yep,
And then probably the one that, I mean, I don't know if accountants like it either, but MTD.
yep,
So I'm pretty sure a lot of people that are going to get affected by MTD don't like it. But again, it's something to be mindful of in terms of extra things that people do need to be doing if they have properties in their own name.
yep. Good. I said there's not many more. There aren't that many more, but we're just going to be going on. Um, um, Toms, anyone crossing their hearts right now, praying, please God, let me be Toms. Sonder, we all know about. If it's a worry to you, you should have been talking to us by now. But historically, there was literally very, very few, and I was told by a tax inspector there were two people in the department at HMRC dealing with Toms. There was an announcement today, more related to taxis than related to us with service accommodation or corporate lets or contractor lets or anything else. But interesting that within that, they're saying within this enlarged team dealing with the Tom's market. Oh, damn. They've really put some resource into that team now, haven't they? That team's bigger. Now, we had a quick story just to break this up. MTD and Tom's, Ed was asking, what are Tom's? Okay, I'll do that then very quickly. Tom's is the tour operator's margin scheme where if you have taken a property in and from somebody else and you're renting it from them and you rent it out, and you've got £1,000 worth of rent this week coming in on that property, do you pay VAT on the £1,000 or do you pay VAT on the money that's left after you've paid the owner of the property because you've rented it off of them? So are you paying VAT on the whole amount or on the margin? Tom's is VAT on the margin. Sonder was a big case, lots of issues, terrible answer, terrible result, needed to be appealed. The appeal's probably not happening. Um, if anyone's involved in the service accommodation, contractor let, corporate let market, please engage with us. And we've got a team of 8 people here that deal with. We've got more people in our company dealing with this than HMRC had. But anyway, that's well changed now. So MTD, Edwards asked Daniel, you can explain that one in a bit.
Yeah, MTD's making tax digital. So this has been like a HMRC sort of pathway for probably the last 10 years or so in terms of rolling this out. So it started off with like VAT submissions and people needing to use accounting software to be able to do that, or bridging software to get the information into HMRC. And then we've got the next batch, which is making tax digital for income tax and self-assessment, which comes into effect from April next year for the first sort of batch of people. And that will affect people that are self-employed, so operating as a sole trader or partnership, and people that have income from property held in their own name. And it's really important to know that if your income, so this is income before any expenses, so it's not about profits that you make. So your income is that rental income that you receive before any deductions, that turnover that you have as a self-employed person before any deductions. If that's over £50,000, when you report your tax return for the 24-25 period, so the current filing period that we're in, running up to 31st of January, you will come under the requirement to report under making tax digital. And what that effectively means is you're going to go from having one return a year to five. So you'll have four quarterly returns effectively, followed by year-end process, which sort of reconciles what you've told them already throughout the year.
Great.
It's a lot of compliance around it.
So the last bit I wanted to raise with regard to property, I don't know, there's a good friend called Ruth, who in addition to being property is also in the hospitality market. And we chat quite regularly about this. Hospitality is really suffering. It was better when obviously the VAT rates were lower, and the hospitality sector has been lobbying to get the VAT rate lower for that market. It hasn't happened. But what the government have said is they're going to lower the business rates on your property. Okay, so that's fine. So there's a little bit of something for the hospitality and leisure sector. And it's going to be paid for by the owners of commercial property in excess of £500,000 commercial property. What's the definition of commercial property then? What definition are they going to use? Now, they refer to it as the warehouses used by the online retail giants. That's the language. That was the language. Yeah, okay. There's lots of other taxes. There's another one about ATED. So if you didn't know what those ones were, Edward, you're going to have fun with ATED. But that one has an opportunity in it. It has a thing they were trying to solve, and it's been so misused. So misused. So we haven't got the definition of what they mean by commercial property yet, worth more than £500,000. Okay. Which I suppose just brings us into the ATED. Can I quickly deal with that one, Daniel?
Yeah.
Great. ATED. That's the last on the property for the property guys now. ATED. Annual tax on envelope dwelling. If a property is used and it's in an enveloped wrapper, an envelope wrapper in their language means a company, all right, LLP, and you use it personally, then you've got to pay an annual tax. So it's an annual tax on a residential property inside a wrapper, inside a company. That's annual tax, ATED. Good. Horrendous fines. Most of us, as property investors, with properties in excess of £500,000 worth of value to the property, don't have to pay it. But we've got to tell the government we don't have to pay it. and you're telling them in advance, most of every other tax obligation that you and I have is, I'll tell you what has happened in the last year. ATED is one where you say, in the coming year, I won't have to pay this. Okay. And because people fail to tell the government that it's coming, you can end up with a fine which escalates up to £1,600 per annum. So the announcement was, we're going to be clearer about how ATED should work, and we're going to keep on with the heavy penalties and the penalties that apply. You can't appeal the penalties. There has been a court case where a judge has said, no, 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 hang on, that's just not fair, and he's reduced the penalties. Now the penalties will be enforced. So ATED will become even more important. Go on, Dan, you're about to jump in.
I know I was going to say cracking Christmas do for him, wasn't it?
Yeah. Okay. Let's meet on property for the property tax advice clients.
Yeah,
Um,
cool. Yeah, I just wanted to touch on one with regards to All Star, which is one of our businesses which sort of focuses on sports people and performers and so on. Um, And there's always been quite a lot of focus around the use of image rights. So the ability for an individual to sell their brand effectively to be able to generate an income. And again, very much around the focus of how that's structured, how that looks, and ultimately how it's taxed. But again, we tend to see quite a lot of these things that sort of come through in our like industry type press because of, from a HMRC perspective, it's always a great win when they get like a household name and then they have a win against them. So we do see a lot under like IR35 with regards to like contractor status and people that are working on TV productions and programs and things. But so we've started to see more on this image rights piece as well. So there was actually a mention around that with regards to effectively saying that all of that income generated from that is going to be treated as employment income. So tax that under income tax and national insurance with that coming into effect from April 2027. So again, if you are in those sectors, in those industries, and again, look at your structure, look what you're doing, look how you're managing those payments, because of, again, that can be quite a significant shift in terms of what the current taxation position is or what you believe it to be at the minute.
Absolutely. Okay. Um, so I'm back again. Sorry, guys. This one is specifically for our expat tax advice clients. So these are the non-residents who are investing in the UK. Um, now, this could be, or people that are UK and moving abroad. Okay, that's what expat tax advice looks after. Okay. Um, the Chancellor is very upset that you have been voluntarily paying your national insurance like good little soldiers whilst you're abroad, and you get the state pension. That's good. But you shouldn't have had because you haven't been giving her income tax on your earnings because you might be sitting in Dubai. Well, I think she's shoving as many people as she can into Dubai. I don't know what her, but she must love going out to Dubai. I don't know what it is. But anyway, number of people that are leaving the country. So from April 26, um, additional qualifying criteria for you to be able to sustain your contribution to your UK state pension. So this is particularly relevant to the UK people that have moved abroad, still want to claim their pension because they have an anticipation of returning. A lot of people do. Yeah, it's going to affect your state pension. Even though you are voluntarily paying towards your state pension, she's got extra criteria to stop you getting your full state pension. Okay. So it's all coming in April 26th. Yes, the Red Book's come out today. We haven't got all the details of this because it's now got to go through Parliament and it's the Finance Act. So once we see what it says, I'll answer. But in the meantime, if you've got a question on it, just come to me or Daniel, but predominantly me on this one. Okay. Um, the next one is for the non-resident who has a company in the UK making money. That company makes money, and let's assume you've got your paperwork done properly, please, folks. Company secretarial, remember what Daniel said, and you're declaring dividends. Okay. And if you've got a non-resident dividend tax credit, right? So that justifies you not paying tax in the UK because You're anticipating you'll pay tax in your home country. Guess where an awful lot of Brits are going? They're going into places where there's not a high tax rate. So guess what she's doing? She will abolish the tax credit. Okay. This is also having an effect 6th of April 26, once it's gone through Parliament. Now, let's be practical about this. The Labour MPs, they've got such a large majority that even if they do rebel over any possibility of welfare cuts, because there's no way the Labour Party is going to have welfare cuts if they can avoid it. They're just spending money. They will get all of this passed. Okay, it's not going to suffer, but we just don't know the detail yet. So we've got two that are going through legislation, which is happening soon. And within 3 months, 4 months, it's going to be applied. So please reach out to me or others and the team at Expat Tax Advice if we can help on those two changes. Daniel, back to
Cool.
you now.
Yeah, so again, something that's sort of been mentioned quite a few times, and again, based on, sorry, quite a few times over recent years, it's not just today, over recent years, like in terms of around investment into HMRC. And again, from the information that's sort of come out, they'd already announced some quite significant numbers with regards to what they refer to as closing the tax gap. So the difference between the tax that they think that is due and what they actually collect. And there's a combination. So there's £64 million over the next 5 years to help with debt collection, and that's using private sector. And then a further 89 million to increase HMRC staff capacity to deal with tax or debt management piece. So again, if you tie this in with the information sharing piece getting stronger and using more resources that are available to them, a higher penalty regime, and more investment in staffing and shaking more pennies out of your pocket, um, it's, I think, inevitable that the level of interest around compliance checks, inquiries, etc., will only increase off the back of that. So again, making sure that you've got protection in place around that, making sure that you're doing your paperwork in the right way, that you're ready. Because I said, I think there's going to be a greater level of interest coming. And again, this is just a continuation of a direction of travel with regards to where they're investing and spending their money. Um, and it looks like additional money that's being spent. It doesn't look like it's something that's previously been, yeah, part of the previous announcements.
I hope you're all impressed that Daniel and I have actually managed to sequence all this properly. So my turn again. My turn now. Crypto. This is for our clients on the crypto tax advice. Now, obviously, I know that clients are in property and ETA and RiverView and etc. Yeah, you all mix up. But okay, crypto. Guess what? There's a lot of information sharing going to be happening. So the UK government, again, with the Financial Action Task Force members, which is basically everyone in the world, because Americans are in and the Americans say everyone else has to be there so that everyone obeys. They're all going to be sharing information. So if you've got a crypto handler, service provider, anywhere in the world that has any dealings with the Brits, the Europeans, or the Americans, they will be sharing information about you that you have got an account and that you are a crypto investor. The 24-25 tax return, the one that you should have completed by now or are in the process of completing, has a dedicated page for the first time related to crypto. There's always been a question on there, but it's now dedicated and it's going to get bigger. Interestingly, with the dates, this information is going to be shared as of the 1st of January 26. Okay, so just think of the date, 26, 1st of January 26. Good. When will HMRC get the information? Early 27. So that means on your 25-26 tax return, when you file it, if you haven't said, yes, I have got crypto investments, as soon as you've filed that, so as soon as we get to February 27, okay, along comes HMRC saying, I've got all this information. And you have got crypto and you haven't told us. Now I'm going to fine you because you've got information you haven't told us. So if you know anyone that's involved with crypto, investment, mining, airdrops, whatever they're involved in with crypto, They have to declare it, all right? That's what all this is about, just forcing you. And again, I'm using that phrase, it's got a narrower and narrower channel. You've got to swim down that channel now. Okay. If you don't, you're going to bump the bank, and bump the bank costs you money. It's going to cost you money anyway on tax, but do you want an extra fines and penalties that go with it? So please be honest with your accountant, because I know the number of times we send out information saying, right, of all of these, what do you have? And I see clients come back and they tick things that they've got. And then I chat with them during the year and they go, oh, yeah, I've been doing crypto for the last 5 years now, but you never told us. Um, and literally, you're fibbing to your accountant. How silly can you get? Anyway, that's mine on crypto.
Cool.
And with 5 minutes spare,
Yeah, I think yeah, I was gonna say if people have got like questions and stuff, please, I say, do drop them in somewhere, and we'll try and cover those off. There's just a few like other bits that have sort of been mentioned that sort of maybe tie in with some other financial advisors and so on that we work with as well. So I just start to run through just a couple of those, just so that yeah, you're aware of those. So. Uh, there's been sort of further focus on around the enterprise investment scheme and venture capital trusts, which from a tax planning point of view can be beneficial to people because they have tax relief that's attached to those investments. As I said, it does tie in with the financial advisory piece because obviously you've got to make sure that it's in line with what it is that you're doing in terms of managing your I guess, risk and portfolio in terms of around how that investment looks. But so it looks like there's some further incentives around those. Is mentioned about the changes, which I think were largely expected around the ISA position. So the reduction, so to keep the £20,000 a year thing, but cap it at 12,000 for cash investment with 8,000 to be used in the stocks and shares types ISAs. But that split not applying to the over 65s. Um, it was something that was mentioned a lot, and it was probably one of the biggest like giveaways in terms of cost, I think, in terms of this two-child limit. And I just want to clarify something on that because I know that it was a couple of things that have caused some uh, misunderstanding, I think, with clients. So it's because it's been referred to as child benefit. It's not the child benefit payments that some of you, if you do receive them, you'll be aware that there is some tapering with the child benefit. That once you earn over a certain amount, you become liable to the high income child benefit charge. Just to be really clear, there's no changes to that charge piece. This two cap or two child limit refers to universal credit. So it's a welfare thing rather than, like I say, a taxation point in terms of what comes around that. But like I said there's been some confusion from people around that. And then, yeah, final one for me is around employee ownership trusts. So again, some of you might have come across this because it's been quite a uh, hot topic, I guess, really with people looking at it because it had 100% capital gains tax relief attached to it with people that are looking to set that sort of structure up. Um, that exemption's been halved. So it's going from 100% exemption down to 50%. So again, if you're looking at around structuring, they referred to it in the speech around like the cooperative working and structures and so on. Not saying it's going to change your thought around employee ownership trusts, but obviously that is a big impact to what they looked like yesterday compared to what they look like today in terms of sort of plan direction on that. I didn't see, I haven't got it in front of me when that kicks in. I don't know whether that was an immediate thing or, which I think it was an immediate thing actually, but we'll check the date on those
mhm.
pieces.
Dan Simon's asked a question about SAS pension scheme. Any changes to
No,
this?
not that I'm aware of. I
I'm
think
not aware of any, and I
so the
wasn't
only
sure if you'd
pen
be.
any pension thing I'm aware of is, I say, the salary sacrifice bit. And again, it did come up with another question which I've answered in the chat box, which all of you would have seen, just with regards to how that what that means for directors. So typically, a director isn't operating via a salary sacrifice. It's not something that they're processing through payroll in lieu of pay.
Yeah,
They might make employer contributions, which are very tax efficient in terms of managing your corporation tax position.
yeah,
The salary sacrifice changes is not affecting those contributions. Obviously, there was a bigger impact to pensions overall. And again, this sort of then ties in with the financial advisors of the world. A few of you that are on here around what that means around inheritance tax and so on, which was coming in from April 27 in terms of some of those reforms that were previously announced. So again, if you're concerned about that sort of level, that is probably a joined up conversation between us from a tax perspective, and then I say your financial advisor in terms of obviously them handling and managing those pension piece. But yeah, in terms of SaaS, yeah, I'm not aware of any particular changes to how they operate, how you use them, etc. Past the IHT bit.
No, I would say both Dan and I have scan read the Red Book. Neither of us saw anything about it. So, yeah, obviously, if anything comes up, we'll highlight it for you, Simon.
Cool.
Anything else for anyone else? No, no other questions.
No other questions. So as always, I haven't got a slide mark, but as always, like if there is like any questions and stuff that come up, we will do a follow up to everybody that signed up today, whether you attended or not, with regards to recording of this. As Mark mentioned, I think at the start, we'll have our budget summary, which will be available to clients tomorrow morning. So we'll get that sent out. Do have a look on our socials and so on. So if you're not connected with me and Mark on LinkedIn, Facebook, etc., then please do connect. And so if you don't receive that, if you're not a client, do comment on posts and stuff that we'll be sharing over the next couple of days. And I'm sure we'll be more than happy to share that report with you as well, so that you've got that. As always with these things, obviously there's always like hot topics that sort of come up around things like budgets and so on. So there's lots of things that people want to be talking about. We are really keen. I say this every time we do this, and sometimes people do come forward, but not as many times as I'd like them to. Around topics and so on that you want covered off. So whether that's general approach to business, specific tax topics, things around specific sectors, then please do let us know, because of it's really useful for us to be able to make sure that we're getting the right information and content out to you that's useful and that you want to engage with. So yeah, we're full on for any feedback and recommendations, aren't we, Mark, in terms of like how much I look.
And it makes our lives easier as well. Otherwise, we've just got to sit here and think about what is it we think you might want.
Yeah, what do you think? Yeah, what do we
Yeah,
think
this is
people
not
want
quite as
rather than
good
just
as
tell it, just tell us, and we'll be able to sort it
yeah,
out.
we'll do it.
So yeah, thank you for everybody that sort of attended, interacted, and so on. It's been really good. Thanks, Mark, for your input. Not too grumpy actually this time. I
No,
think, I
no,
think
no.
we were relatively less last of the summer wine this time compared to normal. So
Yeah, yeah, yes, it was a little bit less, but am I a fan? No. Does everyone know that already? Yeah, of course they do. But yeah, that's
I
fine.
think the key thing is, and I can never emphasize it enough, is that we can control what they're going to say, but we can control what our action is to what they've said. So again, like if we can plan, if we can adapt, if we can get ahead of stuff, then that's how it's not good, but we can have the most positive impact on actually doing stuff and going, we'll grow, we'll do stuff in spite of the government rather than, waiting for them to control what we do.
Yeah, there was a very good post on Facebook today. I don't think Richard Little is as an attendee. Like Richard is a nice mate. Who said, yeah, it's the budget day. We'll moan, but we'll cope. And yeah, that's what we're going to do. We are going to make money. We are entrepreneurs. We do know how to organize ourselves. We'll be fine. We moan a little bit, but then we just get on with it. But most importantly, just get things straight, will you please? Don't get caught doing stupid things.
Yeah. Cool.
Anything else for anyone else? Otherwise, we've both gone.
Yeah, no, I think that's everything. Thank you, everybody.
Thank you.